CK Hutchison, a major Hong Kong conglomerate, plans to sell its stake in two Panama Canal ports to U.S. investors led by BlackRock. This deal is part of a larger transaction valued at $22.8 billion, giving control over 40 ports across 23 countries. The announcement has sparked outrage in China, particularly from state media. The Ta Kung Pao newspaper accused CK Hutchison of betraying Chinese interests. This criticism reflects the tightening business environment in Hong Kong. President Donald Trump had previously expressed concerns over Chinese control of the Panama Canal, further complicating the situation. In response to the deal, Chinese regulators announced an antitrust investigation. They aim to protect fair competition and public interest. Hong Kong's leader, John Lee, has also voiced concerns about the sale. His comments indicate that the deal requires serious scrutiny. Reports suggest that President Xi Jinping is personally displeased. He expected to leverage the Panama Canal ports in negotiations with the United States. CK Hutchison's shares initially rose after the announcement, but fell sharply following the backlash. The company is now caught between the interests of Washington and Beijing. Li Ka-shing, the founder of CK Hutchison, has a storied history in business. He is revered for his ability to navigate both Western and Chinese interests. However, his influence has waned under Xi Jinping's leadership. Li's restructuring of his business interests in 2015 raised eyebrows in Beijing. His family has been perceived as less supportive of the Communist Party compared to other Hong Kong business dynasties. Legally, Beijing faces challenges in blocking the sale. The ports are not under its jurisdiction. However, the antitrust investigation serves as a warning to CK Hutchison. Analysts indicate that Chinese regulators could claim jurisdiction by arguing that the deal would create a monopoly. Proving this claim might be difficult, especially regarding national security. Beijing could exert pressure through CK Hutchison's mainland business interests. The company still generates revenue from China. Its affiliate, CK Asset Holdings, owns numerous properties in the mainland. This exposure makes CK Hutchison vulnerable to Beijing's influence. The deal's future remains uncertain as the deadline approaches. Chinese regulators are investigating, but the Hong Kong government has not yet acted. There are indications that the Chinese government is using a dual approach. Beijing has advised state-owned enterprises to avoid new business with CK Hutchison. This directive could hinder the company's operations. The proposed deal includes a 145-day exclusivity clause for negotiations. After this period, CK Hutchison could sell to another party if necessary. As the deadline nears, CK Hutchison remains silent about its plans. The lack of information leaves many questions unanswered.